Hey everyone, welcome back to Crypto Partner Club. I am Mauro Terrinoni, former investment banker, and today we're analyzing XRP, one of the most controversial cryptocurrencies. In this video, you're going to get three things. First, why XRP surged 500% in December 2024, then crashed 63%. Second, the critical question you should be asking, will XRP benefit from Ripple becoming a regulated bank? And third, three specific price scenarios for XRP for the next 12 to 18 months. By the end, you'll understand whether XRP is a genuine infrastructure play or just a coin that may lose relevance. So let's dive in. XRP is currently trading between $1.30 and $1.40. In July 2025, XRP reached $3.65, its all-time high. Since then, XRP crashed 63%. So far, this seems to be a story very similar to other coins we have seen, including Solana and Ethereum. But here there is more. In December 2024, XRP was trading at 50 cents. 1 month later, it hit $2.60, a quintuple jump in just 30 days. Imagine get that trade for your portfolio, 5 times your return in 1 month. Classic crypto. Now, let me tell you the full story. In December 2020, the SEC sued Ripple, the company behind XRP, alleging $1.3 billion in unregistered securities sales. Following that lawsuit, XRP crashed to 20 cents. Major exchanges delisted it, and for about 3-4 years, XRP was essentially uninvestable in the US. Then, news about a settlement came out that caused this extreme jump, and finally, in August 2025, the settlement with the SEC was formally announced. Ripple paid $125 million, far less than the $2 billion the SEC had sought in the lawsuit. The result is that XRP is now classified as a commodity, not as a security, and with this settlement, the regulatory overhang that kept institutional capital away from XRP for basically 4 years is gone. In the last few months, spot XRP ETFs have been launched and are starting to attract institutional and retail investors. So far, net ETF inflows have been in the region of $1.2 billion. Let's now talk about the original vision behind XRP and how that compares to Bitcoin, to which it is often benchmarked. XRP and Bitcoin were designed to replace legacy payment rails, but they have a radically different philosophy. Bitcoin's approach is pure decentralization. There is no CEO, no company, no roadmap. It's rigid and immutable by design. Bitcoin will do what Bitcoin does. No one controls it. No one pivots it. This is the story everyone knows. XRP's approach is different. Ripple is a proper company. It has leadership, can do strategic pivots. They can work with banks. They can get regulated and adapt a strategy based on market conditions. The difference is both XRP's strength and risk. The strength is that Ripple can adapt. When the SEC sued, they pivoted the strategy. When stablecoins emerged, they launched their own stablecoin, Ripple USD, RLUSD. When bank regulations opened up, they applied for a license. That was the strength, but the risk is that XRP holders are at the mercy of Ripple management. If Ripple leadership decides XRP is no longer central to their vision, the XRP holders cannot do anything about it. Now, let me tell you the story of Ripple's evolution, because it is critical to understanding whether XRP still matters. Ripple was founded in 2012 with the vision of creating a Bitcoin without mining. At the core, there was the XRP ledger, a blockchain that can settle transactions in 3 to 5 seconds with fees of 0.2 cents of a dollar. So 2 cents of a cent of a dollar, essentially free and super fast, faster and cheaper than Bitcoin. Then the founders created 100 billion XRP coins and allocated 80 billion coins to Ripple, the company, and 20 billion coins went directly to the founders. The business model was basically to convince banks and companies to use Ripple's payment platform called RippleNet and use XRP as an optional liquidity enabler. Then the SEC lawsuit hit in December 2020, and for 3 years, Ripple was basically in a regulatory standoff. During that time, the founders started exploring alternatives, and in December 2024, Ripple launched RLUSD, a stablecoin pegged to the US dollar. Then in December 2025, Ripple received conditional approval from the OCC to establish a national trust bank in the US. This means Ripple is becoming a federally regulated financial institution. The bank license allows Ripple to offer custody of digital assets under federal supervision, to manage reserves for RLUSD, and to access the FedWire payment system. This means that Ripple will become part of the banking payment system in the US. The main consequence of this is that Ripple is no longer just a crypto company. It's becoming a FinTech bank with blockchain infrastructure. This is a massive event for tech and blockchain because it demonstrates the bridge between TradFi and DeFi. For example, a JP Morgan corporate client pays a supplier in the Philippines. Today, it uses SWIFT, which takes 3-4 days to settle, and $50 in fees. With the Ripple bridge, the client will make a domestic FedWire transfer to Ripple National Trust Bank, which, through its blockchain, will credit the payment to the bank in the Philippines, all of which in 3 to 5 seconds at 1 cent of a dollar. Boom! Welcome to the new world of global payments. Nearly instantaneous, 24/7. This is the new infrastructure. This is what blockchain can do. Tell your friends who think crypto is a scam. But here's the key question. In this new model, where does XRP fit? When Ripple launched its stablecoin in December 2024, XRP's use case was challenged. XRP is not mandatory when banks use RippleNet. Ripple USD is a viable alternative. Today, Ripple USD has a market cap of $1.4 billion, and it has grown fast since launch. Large institutions, including BlackRock, Deutsche Bank, MasterCard, use RippleNet for settlements. Why would a bank choose XRP, which swings 5 to 10% daily, when they can use RLUSD, which is pegged to the dollar, has no volatility risk, has full regulatory clarity, and widely considered and more understood and safer than a crypto coin? So XRP has not disappeared, but its existence has been weakened, and so its use case. From a traditional finance perspective, I always think, where does the cash flow, and try to position my investment as close as possible to the source of cash. Ripple, the company, will capture payment processing fees, custody revenues, banking margins, RLUSD transaction fees. XRP, the coin, captures minimal transaction fees and no staking yield, unlike Ethereum. In investment banking terms, you invest in the equity because that's where the value accrues. In crypto, you can only buy the coin, but you need to be convinced of what is driving the coin price. This is the dilemma that every XRP investor faces. Before we continue, if you're finding this analysis helpful, hit subscribe. I post weekly videos analyzing crypto through traditional finance frameworks. No hype, no paid promotions, just fundamentals. Now, let me give you the bear case on XRP. 3 structural problems. Bearish risk 1, Ripple USD cannibalization. As explained, RLUSD directly replaces XRP use case. Banks prefer stable coins with zero volatility rather than a volatile coin like XRP. If RLUSD adoption accelerates, XRP may become economically irrelevant. Bearish risk 2, XRP becoming optional in Ripple's business model. Ripple claims 300 plus financial institutions use RippleNet. That sounds impressive, but here's the reality. Only about 40% of those clients actually use XRP for on-demand liquidity, and therefore 60% of clients use RippleNet without touching XRP. XRP can grow as a network while XRP transactions may fall because the token is optional. The whole use case of XRP is, in my view, severely undermined. Bearish risk 3, supply overhang. The founders and Ripple, the company, hold 50 billion XRP coins, which at current prices, it's worth about $70 billion. In traditional finance, this is like a stock with 20% public float and 80% insider control. Insiders support the price, but they also have a value in mind when they want to monetize. This creates uncertainty. If founders decide to sell aggressively at $3, $5, $8, the upside is capped. The supply overhang may cap the return for investors and create constant selling pressure. Now, let's look at the bull case and why this could still work. Bullish catalyst 1, XRP becomes popular for exotic currency pairs. Even if RLUSD is better placed to handle stable settlement, XRP may be needed for liquidity bridges in exotic currency pairs, for example the Philippine pesos or other less mainstream currencies. In those cases, the Ripple stablecoin may not have enough liquidity, and therefore XRP could be a better option. Bullish catalyst number 2, The founders and Ripple, the company, have 50 billion XRP coins worth $70 billion at current market prices. They are economically aligned with XRP holders. They should not let XRP go to zero. They have a massive financial incentive to support the price. The question is, at which level will they support it? Do they support it at $3, $5, $8? We don't know. But that holding creates a floor, but also a ceiling. Bullish Catalyst 3, regulatory clarity. XRP ETFs have attracted so far $1.2 billion since launch in November 2025. This is a legitimate institutional demand for this coin. Further annual inflows could push XRP to a new all-time high. This is the bull case. Let me now give you 3 price scenarios for XRP for the next 12 to 18 months. Scenario 1. Downside case, 80 cents to $1.20. In this scenario, RLUSD fully replaces XRP for payments. Banks choose stable coins over volatile bridge assets. RippleNet grows, but XRP usage declines. Founders begin aggressive selling to monetize holdings. Macro environment worsens, Fed holds rates high, recession fears return. As a consequence, XRP drops to 80 cents on the dollar to $1.20, back below pre-rally levels. Scenario 2, base case, $1.50 to $2.50. In this scenario, XRP coexists with RLUSD. Some liquidity corridors use XRP, most use RLUSD. Ripple Bank Charter approved. Moderate institutional ETFs inflows continue. Founders support the price but also monetize periodically. XRP trades in a range $1.50 to $2.50. Scenario 3, upside case, $3 to $5. In this scenario, institutional demand accelerates. ETF inflows reach 5 to 8 billion annually. Ripple secures Fed master account. XRP becomes required for certain liquidity corridors. Founders actively support price with minimal selling. In this scenario, XRP reaches $3 to $5, potentially aiming towards new all-time highs. So here's my verdict as a former investment banker. Ripple will succeed in bridging DeFi and TradFi. I have high confidence in that. They have the bank charter, they have the institutional network, they have the regulatory clarity, they have the vision and the execution capability. Ripple, the company, will win. But will XRP, the coin, benefit? That's uncertain. Here's the dilemma. If I could invest in Ripple, the equity, I would choose that over XRP anytime. Why? Because cash flows accrue to the equity, not the coin. While Ripple will earn revenues from payment processing fees, custody services, banking margins, Ripple stablecoin interest rate margin, XRP only earned minimal transaction fees and no staking yield. So Ripple's growth story doesn't necessarily drive XRP price. The upside case exists. If institutions mandate XRP for liquidity and founders aggressively support the price, we may see new all-time highs. But this is a highly uncertain bet in my view. You're not just betting on Ripple's success, you are betting on whether XRP remains central to the vision of the founders. Quick disclaimer, this video is for informational and educational purposes only. It is not for financial advice. If you need personalized financial advice, please consult a qualified financial advisor. And remember that when investing, capital is at risk. If you found this analysis helpful, hit subscribe. I post weekly videos analyzing crypto through traditional finance frameworks. No hype, no paid promotions, just fundamentals. See you at the next video.